Hi there, welcome to kneppyinvests and welcome to the 13th of November 2025. Time is currently 3:19 p.m. So about 50 minutes left of trading today on a fairly interesting day on our markets, driven lower by unemployment. You might think driven lower because unemployment was higher than expected. No, the complete opposite. This is where the market becomes stupid, that better than expected unemployment numbers should lead to the market rallying because the economy is doing quite well. But no, it's a complete opposite. The market has dropped because unemployment hasn't come in as high as anticipated, and that means less likely or very low chance of interest rate cut in the next period. So the market doesn't like that, and I think that is completely absurd. So I'm calling the market absurd right now. The market is a little bit too fixated on interest rates, but this is a sign that economy is doing well. And if the economy is doing well, the market should do well as well, even though the market and the economy are not the same. So a weird day in the market when it comes to that. Also doesn't help when a company's or three insiders in a company decide to sell all their shares in the company, and the share price of this company has dropped 30% just because of that. Just because three insiders went, oh, I've got to sell all my shares in the company. Yeah, you go, Droneshield and insiders, CEO included. Sell all your shares and see what happens to the share price. Okay, so a little bit cynical there when it comes to a Droneshield, and it is a massive red flag. It is probably one of the biggest red flags you can get that isn't marked price sensitive. So we'll definitely talk about Droneshield. In fact, Droneshield is the stock of the day. A pretty good day for mining companies. Lithium has done really well today. I'm pretty sure gold's done pretty well as well. I do have two lithium companies now, so Pilbara and Core Lithium. Sort of wish I had a little bit more. Liontown, IGO. So maybe now is the time to get into lithium. There was a nice little report I read. Some bank is now saying there's going to be a significant deficit in lithium supply because of an increase in batteries, people putting batteries into their homes, that sort of thing. And I was thinking, gee, that's exactly what my parents have done. Anyway, yeah, they've now got a battery. And in fact, if we lose power, our power won't go out because we've got a battery. And I'm thinking, gee, I should do that for because I hate when I lose power. So I'm thinking of actually doing that, getting my own battery. Anyway, the agenda for today's video, we'll go through the ASX today. We'll also look at, unemployment. I've already mentioned why our market is down. And I can prove it to you that this was the catalyst for a decrease in our market today. I can actually show you the proof of that, which I will do. We'll go through the ASX today, have a look at the best and worst performing sectors, indices, also companies. And then we'll go through the top 5 stocks of the day. I've already mentioned stock of the day. In fact, the top 4 stocks of the day have had bad days, and I put in the best performing company by percentage change coming in number 5. And chart of the day, I haven't figured out the chart of the day. In fact, I just remembered that I used to do chart of the day quite often. So maybe today's the first time I'm going to miss it. No, maybe I can do one of the companies that did not make it into the top 5. Maybe Motorcycle Holdings or Regis or Orica. Okay. So let's have a look at the ASX today. And typically, I don't really pay close attention to how the market is performing. Now, on open, I think we might have been up. I think we might have been up on open. And when I went away at about 10:30, we were down slightly. Came back to the computer and I just went, whoa, why are we down so much? We're talking about almost 1%. And there is a reason behind this. So let's go to the XJO. This is the daily chart, but let's have a look at the 1-minute chart. And you'll notice, if we go back, I think we were down on open just slightly. Yeah, slightly down, 0.08, so nothing too big. But we were in a 1-minute downtrend just before that. In fact, we moved into the 1-minute downtrend at 12:53 yesterday. There you go. Anyway, so the market was, or the ASX or XJO was bouncing around for the first 1 hour and a half. And then all of a sudden at 10:30 a.m. Brisbane time, this is still in Brisbane time, so at 11:30 normal people time, the XJO fell 0.24% in 1 minute and then just continued to collapse. So this is at not a round hour, but this is a time that we do see some economic news released. And that economic news is the first thing on trading economics. Australia jobless rate falls more than expected. So unemployment rate is lower than expected. Estimated to be 4.4%, came in at 4.3% and down from 4.5% in September. So this is more reason. This will give the RBA more reason not to lower interest rates. They don't need to lower interest rates. The economy is doing fine right now. There is no reason to lower interest rates, but the market is fretting about this. Oh no, we want to see interest rates drop because that's good for growth. I don't know. It's weird, but for me, this is a sign that there's nothing wrong with the economy. So, and this is good for the stock market over time. So I think this is more of short-term, I wouldn't say panicking, but just short-term reaction from the market. That's just my opinion. I could be completely wrong. Anyway, so I think this is good news. It's not bad news. It's good news. We didn't want to see employment rise to 5%. That'd be terrible. Sure, interest rates would be cut, but that would probably mean we're moving towards a recession. And that's really bad for the economy and also for the stock market. Anyway, let's move on to the ASX, or the rest of ASX today. Pretty good day for resources, up 0.7%, particularly gold and lithium. The reason I know lithium's had a really good day is because I went to the stock scans, had a look at the best performing companies, and I noticed quite a few lithium, including Core Lithium, which I recently bought. That was, I suppose, luck that I bought it recently. Anyway, not skill. Anyway, best and worst performing sectors, probably only one sector's done really well, maybe two. Mining, energy, let's have a look. Materials up 1.27%, even energy down 2.62%. There you go. Real estate really bad. That sort of makes sense, down 3.14%. And the reason that's bad is because real estate is inversely related to interest rates. So if interest rates going up, real estate go down. Interest rates going down, real estate should do really well. IT, another bad day. Xero released their results today. Share price was down. We'll have a look at that in a second. And in fact, across the board, only three sectors not down. Well, not down by more than 1%. Discretionary, healthcare, and materials is up. So materials, in a way, has saved us from even having a worse day because that looks horrendous. We have six sectors down by more than 1.5%. Industrial staples, telecommunications, energy, real estate, and IT. If you have a look at the IT, down 4.2%. So another bad day for this sector. Let's have a look. And yeah, so yeah, Xero, NextDC also had an AGM. So pretty bad day there for tech. Another bad day. Gold's up 2.41% and banks down 1.28% as well. So banks are feeling a bit of heat right now. And I'm wondering, as we go back to the daily chart, is CBA's chart looking really... Oh, CBA is up. There you go, CBA is up. This, I think, is just a little bit of a rebound because share price has dropped a fair bit. So you get a lot of investors coming in going, oh, share price of CBA has dropped. Now's the time to buy. And I think that is probably the wrong mentality right now. In fact, majority of times that is a wrong mentality. Just because share price has dropped doesn't mean it's better value, particularly if there's news flow. There's probably a reason why the share price has dropped a lot, and it's because of news flow, and more than likely the news flow is not positive. Definitely was not positive for CB. Well, wasn't that bad. Well, it's still really overvalued, put it that way. Wasn't a shockingly bad announcement, but the market didn't like it. Okay, ASX 20 down 1.04%. We'll have a look at this. We already know CBA is up. Is Northern Star in the ASX 20? So Northern Star, maybe CSL, ResMed, maybe three companies up, three or four up. Six up, in fact. Those six companies are Northern Star, Fortescue, yeah, CSL, CBA, Rio Tinto, BHP. So, yeah, iron ore's had a good day as well. And worst performing companies, yeah, ANZ, ex-dividend, I'm assuming. That would make sense. Share price had been a bit of a tear. They did release results, which means more than likely ex-dividend, 13th of the 11th. That is today. So that can distort the market as well. Goodman Group, Telstra, sort of interested to see why Telstra is down, but that's not interesting enough to delve more deeply into it. Okay, ASX 200 stocks with the best fundamentals, dividend yield, P ratio, PEG ratio, week 46. CBA tumbled 9% in 2 days. Here's everything you need to know. Well, there's not much you really need to know. I'm going to have a look at this later. Okay, now on to the best and worst performing companies on the ASX today, starting with the top gainers. And at number one, we have a company called ReNerve, a recent listing on the ASX, share price up 85.71%, a pretty big turnover as well. I will talk about that company. It is or has come into number 5 in the top 5 stocks of the day. Not the sort of company I'll be paying as close attention to just yet. I like to wait. And then we have Core Lithium up 27%. And a few other mining companies. AFL Legal Group did not make them a top 5, 15.4%. But it's not the sort of company I do like. I don't like these sort of companies. These, what do you call it? Heavy, labor-heavy companies. There's another word for that. Labor-heavy companies. So they're reliant on lawyers. And in fact, in their announcement today, they actually mentioned, in fact, I'll talk about it now. It's easy to remember if you like AFL, the sport, but in their announcement today, or quarterly update, they actually mentioned they're trying to make their lawyers who work for them more happy or something like that. But all it takes, I'll see if I can remember where they wrote it. I probably won't be able to find it now. I just remember sort of coming away from this saying, oh, look, we're trying to make our lawyers happy. Or maybe not. Happy wasn't the word they used, but that's what they have to do. And lawyers cost a lot of money. Probably the main reason most lawyers become lawyers is because of the money. I'm just trying to remember. Yeah, here we are. We are now starting to benefit from the lag effect of our improved capacity to attract and retain high-quality lawyers. And the way you do that is pay them more. So to my way of thinking, this is not an attractive business model to be on the ASX. That's just my opinion. So lawyers, accountants, that sort of thing. So that's one of the reasons why I didn't really pay much attention to this announcement. But the market likes it. And chart, let's have a look at the chart for AFL. Yeah, the chart is a big for me as well. That's the daily chart. Now, you could say starting to a bit of a shifting trend, maybe, with today's announcement, but not for me. If you have a look at the weekly chart, yeah, it's been on the ASX since 2019, but yeah, I just have no interest in these type of companies. Anyway, but more than likely, that'll be the only time I ever talk about AFL or AF Legal Group. Other than that, yeah, a lot of mining companies. And if you have a look at top gainers by market cap, Pilbara, IGO, Liontown, 3 Lithium. I don't think IGO is pure lithium. Domino's Pizza, nice little rebound. There's another lithium company I've never heard of, Elvra Lithium. They must have changed their name. Elvra Lithium. Why have I never heard of this? Let's go have a look at announcements. And let's go back. There we go. Change of company name on the 26th of September. There you go. What were they before? Oh, Sayona. There you go. SYA. Now they're ELV. That sort of makes sense. Core Lithium. Yep. Silver. So silver's probably had a pretty good day. So a lot of silver, gold, lithium companies. Stealth Group, another really good day. I was hoping the share price would drop over the next few days and I could take a little bit of trading position. But now the market cap is getting to the point where, meh. Okay, now on to the top losers. And Droneshield. Yeah, stock of the day. Didn't even think about it. Massive turnover. And this is all about the 3 insiders, including CL, selling all their shares. All at once. Maybe not all at once on the same day, but this is a red flag. I actually did go to Hot Copper just to see what some of the people are saying, and some of them are saying, this is no big deal. We see this all the time. No, you don't see all these insiders selling all their shares. All their shares. That's why the share price is down. Then I saw an interesting comment. They've done this in the past. So a few years ago they did this. They sold all the shares. And then I was thinking, how did they get all these shares back? That's because they gave themselves all these really nice little benefits and all these shares. So if they keep on dumping shares, it's a red flag. Research has been done on this. When you get a few insiders selling all at the same time and a large amount of the shares, it's actually a massive red flag. And just because they've done in the past doesn't necessarily mean, because when they did in the past, apparently share price rallied after that, but that's a one-off. That's a one-off. So I can definitely understand why the share price is down. So I'll talk about that in a second. Well, maybe not a second. Webjet Group released results. Talk about that company as well. Share price down a fair bit. Not surprised there. And that's about it. And top losers by market cap. Xero released results as well. Infratrail released results. Not talking about that company. Graincorp released results. So a lot of companies released results today and all down. Superloop had AGM. Korea, so quite a few tech companies here. Korea, Elsight, Electro Optics, and Star Pharma. KMD brand is definitely not tech. Lumos Diagnostics. So all these companies that have been running hot recently now pulling back a fair bit, including two of my companies, Lumos and Star Pharma. And Elsight. I actually also own some Elsight. There you go. So let's go to the top 5 stocks of the day. We'll start off with ReNerve. What do you think this company does? Just by the name, ReNerve. So share price up 71.43%. If you said they're a healthcare company in regards to fixing nerves or renerving, you'll be right. You are absolutely right. Now, this company is a smaller company. If we go back to the top gainers, yeah, market cap is 21.61 million. That's after the share price rising 85%. So this is a fairly small company. I did have a look at their most recent Appendix 4C about 3 or 4 days ago. $44,000 in receipts. So this company has gone from nothing, selling nothing, to in the stage where they are selling stuff, but they've just started. 44,000. I might have said that. Quarterly sales rose 38% compared to the corresponding quarter in financial year 25. I didn't think they've been selling that long. Yeah, I didn't. I thought they just started selling Recuff or whatever it's called. ReNuff. I forget what it's called. Anyway, so what I also like to do is have a look at a company's. They release a quarterly investor presentation on the 10th. That's only a few days ago. And transforming nerve repair through science. Yeah, so it's in their name. And they have a few products here. Here it is, Nerve Cuff. That's what it is. So that's on market. They have Nerve Tube, Nerve Protector, Nerve Guide Matrix, Nerve Cap. They also have some other stuff here, which I didn't really look at. And some fairly big markets, particularly when it comes to ReNerve nerve conduit. So what they're selling now is Nerve Cuff, used on damaged or transected nerves with no gaps or gap closure. So trauma, breast reconstruction, orthopedics, oral, and maxillofacial surgery. So the TAM is expected to rise to almost $1 billion in 2030. The ReNerve nerve conduit, protecting injured nerve repairs, has an estimated TAM of $3.2 billion. So the announcement today was about Nerve Cuff. And their announcement was Nerve Cuff approved for use in US Department of Defense and VA, I suppose that's Veterans Affairs, hospitals. That actually is pretty good announcement in my opinion, but I still want to see some financial evidence that is going to be highly beneficial to this company. Well, it's going to be beneficial, but highly beneficial. So definitely can sort of understand why the market is a little bit excited about this when it comes to ReNerve, but I need a little bit more. I need a little bit more when it comes to this company. So let's have a look at the chart for ReNerve. RNV, recently listed, maybe a year and a half ago. Let's see how right I am. A year ago, almost a year ago, 26th of November, 2024. Nothing much has happened since then. Share price looks like it wanted to break out today. You can see a fairly big tail. Share price got as high as 22, currently about 18 cents. We saw the same thing happen on the 28th of March this year. Share price rallied to 22 cents. There you go, 22 cents both times. And then fell away. That's the sort of candlestick you don't want to see on the 28th of March. Interest faded fairly quickly on that announcement. Big volume coming through today. We don't want to see the share price drop any further than, I'd say, 15, maybe 14 cents, because that's back into that range. This company has been trading in between about 9.5 and 14 cents for about 6 months. So we don't want to see the share price drop there. We want to see the share price remain in this level. So this could be the start of, this could be the making of a new company on the ASX that we want to invest in. over the next 5 years or so. And just based off your risk appetite. If you're a more risk taker, maybe now's the time. If you're more risk averse, you might want to wait for 5 years, maybe even 10 years of financial history. And some investors even want to wait 5 or 10 years of profitability before they invest. And that is why this can be attractive to more of those risk takers, because it can play out for a long period of time until the company is attracted to all types of investors. Anyway, a long way to go for ReNerve to get to that point. Okay, so that's ReNerve. I don't know if I've looked at this company in depth before, maybe once or twice just quickly. Coming in number 4, we have Xero. They released results down, share price down 9.1%. I didn't think these results were that bad. And in fact, the share price didn't open that much lower. Yeah, very slightly low. So most of the selling pressure today has been during the day. And I think this has been just because of the broad tech sell-off right now. Because if these results are really, really bad, I think the share price would have opened significantly lower on open, not just been trading down through the day. Because I am a shareholder of this company, I had a quick look at the numbers, nothing too off. Now, I haven't had a look at Cover Brief just yet, so maybe they slightly missed expectations. I'm just to see if Xero is mentioned. There we go. Xero shares slide despite inline result as Melio revenue soars. So that probably means that, yeah. Gary Sheriff, RBC, said the core result was in line with estimates with a solid performance by newly acquired payment software company Melio. Cash flow looks particularly strong. I actually do agree with that. I do like their cash flow. Really nice free cash flow coming through for this company. So I thought these results were not that bad. I thought they were pretty good. Not 9% bad. When I saw the share price down a little bit on open, I was like, yeah, that makes sense. I didn't think it wasn't amazing. Free cash flow of 321.1 million New Zealand dollars. So significantly higher than last year, which was 208.69. So really nice generation and increase or growth of free cash flow. But the market doesn't like it. And I still think, and we can just confirm this, a lot of selling has been during the day, yeah. So, in fact, selling started really happening at about 4 or 5 minutes after open. There was a bit of a sell-off, share price stabilized, and then there was a bit of a rally in the share price just before the unemployment numbers came in, and that rally finished right at 10.28, and then we have seen a bit of a sell-off. If you have a look at the daily chart for Xero, it actually does look pretty bad. Share price now has fallen through the lows this company saw back in April. And fun enough, this company is now much better position right now than it was back then. And the very fact that this share price is now at levels we saw, this is 1 year low, and I still think this company is better placed right now than it has been. Okay, so that's Xero. Possibly, if you think this company is a high-quality company, if you go back to the weekly chart, if you think this company is a high-quality company, now might be the time to buy, because the share price is now below the 200-week moving average. And as that saying goes, even though it's attributable to Charlie Munger, I don't believe that. If you buy high-quality companies at or below the 200-week moving average, you will significantly beat the market. And in fact, that has been true for Xero through the last 8 years. It's only been below the 200-week moving average for 2 periods, right now for 1 day, and during that tech sell-off because of rising interest rates. And that's when I bought, right on the 200-week moving average. So right now we're at that period. So this could be some good buying for Xero if you believe that it's a high-quality company, etc., etc. Okay, what else will we talk about today? Company coming in number 3, we have Graincorp. Now, this is not a company I'll ever own for the long term. It's an agricultural company. It's a hard business, tough life, being a farmer and running farms and stuff like this. And things can just go wrong, out of your control. So Graincorp, share price down 10.6% on results. I didn't really look at these results all that much. I just wanted to see how the market react. Here we go. Graincorp shares tumble as financial 25 earnings missed estimates. That's all she wrote. That's all you need to know. That's all you need to know. If results miss expectations, the share price more than likely will drop because the market expected better. And for those who don't understand why that happens, just imagine you did a lot of research in this company and you expected the financials to come in at a certain number. You put all your numbers into your valuation machine, and your valuation machine spits out a good value or a valuation for Graincorp. And then the results came in worse than expected. So what do you have to do? You have to go back to your valuation machine, put in the new numbers, and your new value for Graincorp is going to be lower. Yeah, it's just sort of makes sense, doesn't it? That is why when a company misses expectations, the share price should drop. Profit down a fair bit, underlying profit up. So we have underlying profit up from 77 to 87 million. The other thing you'll probably notice is this company probably has significant revenues but very low profits. So low margin business, that sort of thing. In fact, we can have a look at, I just want to see how much revenue they have, because they haven't mentioned revenue here. They just mentioned EBITDA, profit, core cash, financial year 25 dividends, which is flat. Cash is actually down. And I just want to see how much revenue, so we can just sort of gauge the margins for this business. I would be shocked if revenue is, well, it's actually worse. The margin's even worse. $7.3 billion in revenue, profit barely positive. So margins are so small. So the slightest thing that goes wrong for this company can destroy the company's profit. And if we have a look at the financial statements, I think we are. Oh, that's segments. So we're in the notes. Here we go. So revenue 7.3 billion, goods purchased for resale 5.1 billion, raw materials 1.3 billion, employment benefits 428 million, and profit of 39.9 million, profit before income tax 72.4. So margins in this company are light. 1% profit before income tax margin. 1%. So that's another reason why I probably would not own this company for the long term. It's not, I don't think it's a high quality company because of that. It's not the company's fault. It's just the sector they're in. Anyway, so the results did not meet expectations and share price has dropped. Let's have a look at the chart for Graincorp. I will trade this, by the way. I will trade this. And trend killer event. In fact, this company seems to have a few trend killer events. The last one was in November last year. Oh, when will the market learn? So in November last year, it looks like they released results and share price just plunged and just kept on falling for the next 6 months. And then 6 months later, the market forgets and share price rallied. Share price got back up to where it was 1 year ago. And again, we've seen the exact same thing happen. Share price plunged on results. So there's probably a good chance the share price will drop from here. Looks like maybe when they release results in May, share price actually rallied on that day. Let's have a look at the weekly chart. This should also show you why this is not a long-term hold. Well, actually, there was a really good period from 20 to 22. Share price went on a really good rally and is now going sideways. But before that, share price going sideways for a long period of time. Again, yeah, the share price went sideways between 2013, 2020, 2021. You'll be becoming bored if you're owning these shares back then. And there's a big opportunity cost as well. Okay, so that is Graincorp coming in number 3. Now, the other one was Webjet Group, another company that released results. I always confuse this one with the other one. I don't even know if there's Webjet. So there was Webjet, and they divided themselves into 2 companies, Webjet and the Webbeds. But they made the names so similar, I can't even tell you which one is which. So there's Web Travel and Webjet. I don't know which one's which. Which one is the one that has web beds? Is it Web Travel? Let's have a look, see. I just wish they'd made the names a little bit more obvious. They did release something on the 7th. Web Travel. So this is the Webbeds one, because they've mentioned Webbeds. Why not just call them Webbeds instead of Web Travel Group? Oh, to make my life so much easier. I should talk to the CEO about that. Anyway, so this is the other one, which Webjet Group. This is the business to consumer or something like that. Share price down 17%. Not surprised with this one. Oh, it wasn't results. Releases preliminary results. First half preliminary results. Okay. I'm not surprised share price went down. The commentary was painting a picture of a weak trading environment, and the market doesn't like that at all. The numbers weren't massively, I suppose, bad, but for instance, statutory profit was actually up 51% from 4.1 to 6.1, underlying profit up 16%, but bookings down, TTV down, revenue down slightly. But for me, it was just mostly the what do you call it, the commentary. And if you have a look at the financial year 26 expectations as well, that's probably the main reason. So financial year 26 forecast, subdued. You don't want to see that word being the first one in the paragraph under financial year 26. Subdued domestic leisure travel demand has persisted into second half financial year 26 against a backdrop of interest rates being retained at present levels and domestic airfares remaining elevated. So some subdued commentary, lackluster commentary. The company has assessed the combination of a later start for its OTA brand relaunch, a persistent soft macro environment leading to longer lead time for... Now, if the economy is actually really good right now, that could be beneficial for this company. Maybe it's just people don't want to travel as much now. I don't know. And are responsible but moderated investments in its free... So anyway, and they're expecting underlying EBITDA to be between 32, down 9 to 40% on the PCP, not the drug prior. PCP is prior comparable period, previous corresponding. I always thought of it as the previous corresponding period. So prior comparable period makes sense as well. Previous corresponding period. They both make sense. Anyway, so share price down a fair bit. Now, I'm pretty sure this one, we saw the share price rally not that long ago, maybe a year ago. Let's see how right I am. We'll go back to the daily chart. Share price rallied, 6 months ago. Well, okay. So share price rallied 6 months ago. I think I can't remember. It is around results, but there was something else. And then the share price went sideways. And now the share price is down. So this is sort of a get out. Get out of this. Get out of this. That's if I was trading this, and that wouldn't be because that chart's no reason to be trading it. But if I had this, I'd be getting out. That's my rule. Okay, and coming in number one, this sort of was a no-brainer. Droneshield share price down 32.47%. I had no idea there was a change of directors notice because it's not price sensitive. And the only reason I knew the share price was down is because I went to, what I usually do after market is open at about 10:20, I just have a quick look at the top gainers and top losers just to see. And I don't always do that. But when I had a look at the top losers, I went, Droneshield's down like 30%. What's happening here? I must have missed something, but I didn't. But there is, look at that. The market has rallied. There you go. So I thought the market was overreacting, being down 1%. Anyway, and then I went to the announcements for Droneshield and I saw 3 change of directors interest notice, and I knew straight away what had happened. These 3 insiders sold a lot of shares. Market doesn't like that, and I think it's even worse than I would have anticipated. The other thing I should mention is change of directors interest notices are not price sensitive, but on occasion they should be, and this was an occasion they should have been price sensitive, because when directors or CEOs and insiders sell all their shares, that's a massive red flag. That is price sensitive. And we can see that with the share price dropping 32.32%. This is significant news. So let's open it. And they've all done it at once. This sort of reminds me, it's not as bad as A2 Milk, but it sort of reminds me of A2 Milk. Now, A2 Milk saw all their, maybe not all, but a lot of the directors sell just after results and just before the company issued the first of 4 profit downgrades. Always remember that. And research has shown that when you get a group of insiders selling at the same time and they're selling a lot of shares at the same time, it is a signal. It's the only signal you get when insiders are selling. So if there's one insider selling just a small amount of shares, there's no signal. But this is a signal. It's a red flag, massive red flag. I did not like the wording on one of these as well. Which one was it? The CEO, which is Oleg Vornik. I don't like what it was written here. So he had 14.8 fully paid ordinary shares. He sold a lot. He sold a lot. He has a bit of unlisted and vested performance options, that sort of thing. And it was just mentioned here, which I just hate, in the nature of change, on market trade, the director retains a significant amount of vested and unvested equity in the business. For me, that's not significant. What he's got, those performance options are not significant compared to what he sold. And it wasn't just him. If it was maybe just him, maybe, but it was two other insiders. Peter James he sold 3.7 million indirect and out of his super as well. So he sold them all, direct and indirect, sold them all. Whoops. And the other one was Jethro Marks. He had 1.46 million shares, sold them all. So we have three insiders selling all their shares. Do you wonder why the share price is down? My only querying was why all these people in Hot Copper were saying this is no big deal. This is a massive deal. Massive deal. This would be, get out of this. There's a chance, not an absolute, but there is a chance something bad is going to happen with Droneshield soon. Now, this is not the first red flag this company has released in the past week. So on the 10th, so 3 days ago, this company released an announcement titled Increasing Order Pace with the latest 7.6 million order. And apparently, I did read one person say they bought on the back of this announcement and they should sue. Maybe not, I'm getting a little bit overboard. So they're just saying this was a new order, that sort of thing. Great, this company is just moving forward leaps and bounds. They had to retract this announcement because it was not true. It was not a new order. It was just, what do they say? The November contracts did not represent new orders. They were just reissued by the customer due to regulatory updates. Whew. Anyway, so I had a look at this Droneshield the other day for a potential trade because the share price had dropped a fair bit and I was just waiting for any sign of a bounce. We haven't seen any really bounce, and this is negative. This is a really negative move for Droneshield. I could see this falling significantly from here. Maybe back down below $1. I think that has potential. And the reason I wouldn't even be in this right now is because I have no idea which way the share price. I could see a bounce. Share price has dropped a lot recently. I could see a bounce, but whether the bounce is would continue at any meaningful level, don't know. I doubt it. But I could see the share price dropping back below $1 easily. We've seen this in the past. In fact, last time we saw a significant selling day was on the 16th of July 2024. Share price dropped 22.3% on that day. I don't believe there was any news flow. It was just too much valuation for this company. And then we just saw selling continue. So this is sort of like that. So that's Droneshield coming in at number one, the stock of the day. And a bad day for Droneshield. I'd love to hear if anyone is still owning shares in this one. Because, yeah, I'd like to see why you maintain faith in this company if the CEO and two other insiders completely sold all their shares. For me, that is hey, why are you selling all your shares? Okay, So the chart of the day is going to be Motorcycle Holdings. I was willing to sell this because they went to training halt the other day. And I just not like the sounding of this. And you'll notice the share price has not moved. Did not like the sound of this. It was company has identified an historical underpayment of vehicle registration duty in each state and the territory in which it conducts business. Talking about internal review, blah, blah, blah. Quantify the extent of the underpayments and the potential implications. So I thought, this was a really nice chart, like trading this one. And I thought, I'm going to have to get out of this. They released the announcement this morning, and I went, I'm not sure this is, well, it's worthy of announcement, but it's not that bad. It has identified an underpayment of vehicle registration duty in relation to vehicle side by M2 in potentially each state and the territory. It was only for a subset. So they do mention that. The underpayments relate to duty that was not but should have been calculated, collected, remitted in relation to the value of certain optional equipment fitted to both new and used motorcycles sold. The value of that equipment was not included when calculating the amount. So it was not as bad as I thought it was going to be, put it that way. And it seems like the market has agreed with me, share price has not moved. Share price has not moved. I think there was a little bit of selling on open, which is understandable, but the share price has not moved. So I'm very happy that I did not have to sell this one. Sold Coronado Global Resources the other day. By the way, how's that going? If the share price has rallied like 20%, I'll be, no, it's okay. And yeah, this is a nice looking chart for motorcycle. It's, oh, this was double. So bought at 85, no, 185 1 year ago. 20. I bought on the 27th of November, or just after the 27th of November, on a nice little breakout. And yeah, this is a beautiful looking chart. And I thought it's going to have to sell. But no, excellent news. Okay, that's it for today's video. And a really interesting day, but we're starting to see a bit of a rally because I think the market was being silly by selling off just because unemployment was better than expected. That's just crazy. That's just crazy. So it's insanity. In my opinion, that's insanity. Okay, so if you have any questions, any thoughts, leave in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.